Hi, I'm Tessa Allen, and I'm here to help small business owners understand what information to give to their tax preparer. So first off, I'm going to talk about what is a business versus what's just a hobby. So as far as the IRS is concerned, if you have a 1099 that says you got some income from somewhere, normally it'll say non-employee compensation on it. That means you're self-employed, whether you like it or not. You're going to have to file taxes as someone who's self-employed. And the good thing, you get to deduct expenses. So figuring out what those expenses are is important. But also, say you have a business because you do freelance photography or you're in a band or whatever. Yes, of course there's all those credit card transactions, things on PayPal, Etsy, whatever, that are recorded and you obviously have to be reporting. And then there's all that cash you got from selling stuff, at a fair or whatever. And a lot of people think that if it's cash, then they don't have to report it. And unfortunately, that's not really true. As far as the IRS concerns is, if you made money in exchange for some kind of work you did or something you sold, and you're selling it because you are trying to make a business of selling things, you're supposed to be reporting that income. There is a little caveat that if you made less than $400 of profit, meaning all the income that came in through credit cards and cash and everything else, and you subtracted out all your expenses, if it all comes out to less than $400, then you don't have to report it. But a lot of people would never know if it's $400 or not unless you go through this whole process anyway. So if everything was just completely in the hole and you didn't make any money because it was just your creative endeavor and it's a huge loss. Sometimes it can be beneficial to take a loss on your taxes. If you have regular W-2 income to back up, or to be there, then you have a loss from a business. For 1 year, that could be beneficial. If you're actually really trying to start a business and you really want that to go somewhere, then that's really legitimate. It's okay to claim a loss. Sometimes it might be better to count that as startup costs. But once you are open for business, once you're bringing in income, once your doors are open for business, it's no longer startup costs, and then it's just a business loss. If you aren't really making very much money, or business gain, we'll see. But those expenses before you started can be counted as startup costs, and that's something you can talk to your tax preparer about. So that's all getting started. So adding up all your stuff through the year. Sometimes it'll all be on a 1099 that you got in the mail because you only had one source of income, and sometimes it's going to be little things here and there, and the best way to be keeping track of that is either through some kind of accounting software or on a spreadsheet. Every time someone gave you money, sometimes just a little piece of paper, like a little notebook. I'm in a band, and so after every concert, we get in the van and I count up the money and I write it in my little notebook. And that's totally legitimate. That's great. And that is a good way to do it. Of course, there's more sophisticated ways. You can do things with an app. You can do things through QuickBooks if you want to. And there's all kinds of different things you can use. But the most simple is just writing it on a piece of paper. The next simplest, but more complicated, is using a spreadsheet. You can use Google Sheets, Excel, Open Office. There's lots of choices. And so that's how you keep track of your income.